Assalamu alaikum, brother Abdullah.
Wa alaikum assalam wa rahmatullahi wa barakatuh.
Thank you very much for your time today. Really, really appreciate it. I know you've flown in from Melbourne as well to do this, so very much appreciative. Now, just as a quick introduction, you are a director and founder of the Mecca Company Group, right? And that is basically a buyer's agency.
Correct.
What is a buyer's agent? What's a buyer's agency? What did you guys do?
Well, a buyer's agent essentially represents the buyer in a real estate transaction. So what we do essentially is we look at, we have a methodology that identifies growth markets.
Right. So when you say looks after the buyer, so are these essentially, so if I want to buy a property, I'd come to someone like you and say, hey, can you look after me?
Yeah.
And so then what is that sort of service? What does that look like? What does that entail?
So look, our main clientele are investors.
Yeah.
So they would come to us with a budget and say, you know, hey, I've got an X amount of budget. They don't really know what they want to buy, but they just want to understand what they can get with it. So we essentially build like a bit of a strategy and a game plan for them.
Right.
But we try and understand like their risk appetite, you know, their profile, and then provide probably the best sort of advice on what property we should be targeting.
So I'm assuming you're having quite a fair few conversations before that final sort of property is purchased.
Yeah. What dictates it is it's going to be more their budget, and then, you know, and sort of how much cash they have or equity they have to put into the next purchase.
Right. And would you say you have, in terms of your clientele, and I'm assuming it's not just Muslims, it's across the board.
Yeah, 35% of our community is probably our clientele.
Right.
And then the balance is just across the board.
Just across the board.
And we do have about 15% that are expats living in.
Oh, right. Okay.
Yeah,
and
living in Japan and the Middle East. Yeah.
So then they're contacting you all the way from overseas to say, hey, can you help us buy a property?
Yeah.
Interesting. And okay, because I know, for example, in the Middle East, there's no tax. For most of the existing countries. So how does that work out for them if they have a property here?
So, well, they miss out on the negative human benefits because they earn a living overseas. Yeah. So I think those type of clients are more interested in, I would say, just high growth investments. They see their markets as quite young and are probably a little bit volatile, and hasn't got the track record to give them the confidence to invest in those markets. I'm talking about Dubai and Qatar and Saudi Arabia.
Right.
So, and given that they got a PR or a citizenship, they probably want to, you know, just get into the market here in Australia so they can at least have a nest egg when they come back.
Okay, so that's an interesting. And so how long have you been doing this for? What's how long?
3.5 years.
3.5 years, mashallah.
Yeah.
How'd you get into it?
Look, I've been in property since 2007, and I've seen four aggressive cycles, you know, in terms of the GFC in 2008. You know, we experienced 2014, 2015, APRA introduced ethical lending standards, which made it really difficult for investors to get into the market. They introduced LMI, and there was minimum loans of 90% LVR.
Yeah.
And then in 2018 there was a Royal Commission into the finance sector, and then 2020 COVID started. So I've seen
we've seen the whole
we've seen those cycles. But one thing that stood out in each of those cycles was people felt very comfortable with property as a safe haven to invest in, because in those markets the equities market generally dropped quite significantly.
Do you think this is ever going to end, the way the property is growing? What are your thoughts from your
I don't think it ever will. I think.
Do you think?
I think it's just I don't think it'll slow down, because we're still a very young country, and we have a really small population, and we just don't have the supply that's going to meet the demand. We just don't have it.
Right.
So
half our land is just desert anyway.
Yeah, it's all desert, but we don't have if you look at who opens up more housing, it's investors, mum and dad investors.
Yeah.
Governments don't really invest in the property market. And then if you look at who opens up those house and land markets, it's developers.
Yeah. Okay.
And if you take it back a step further and look at, well, how do they establish their PSPs? Well, developers pay a contribution tax, to the council and the government to give them enough funding to
keep going,
to basically set up master plans, and so it's really investors that shaping our our housing supply.
And from that, so the investors that you talk of, are these mostly local investors, or are you seeing a lot of that come from overseas?
No, mostly local.
Yeah.
85% local and 15% overseas. Yeah.
Okay. And the other question that I have is, with the current status of just how the rents have gone up so high, at least in New South Wales, they have. What are your thoughts on that? Like, what do you think how long do you think that's going to continue for? Or where do you see
I think we've seen the rental market cool off.
Yeah.
In the last 3 months, I think we're starting to see that rental market ease off, and I think we've seen that in Sydney, although it's still quite challenging.
Yeah.
Melbourne is going through probably a really, really bad rental period at the moment, just because of the amount of investors that are leaving the state. This is Victoria I'm talking about.
Why are they leaving the state?
Government policies. So there's a lot more land tax now in Victoria. They've done a land tax reform. So you used to have to pay land tax if your property was worth if your land value was worth $350,000 or more. Now it's reduced to $50,000 under your personal name and $25,000 under a trust name.
Okay, so like as you enter the market,
so people that own apartments are now paying land tax. So I think if your holding costs are high, if your tax is a lot higher, your interest obviously is a lot higher. Melbourne is known to be, or Victoria is known to be, probably the lowest rental in the country.
Yeah. Just
because of during COVID, we had an exodus of migration out of Victoria, so the rental market cooled off a lot.
Yeah.
But where I see us heading, I think a lot of it's tied to migration. So the last 2 years we had record levels of migration come through, and it put a lot of pressure on the housing market. It's
crazy.
Yeah, which was crazy. Yeah.
And hopefully they've now sorted out how that's gonna pan out for the future, and hopefully we can start paying a little bit less rent. And speaking of, obviously this whole topic is property. What one of the biggest questions, obviously, from a Muslim or Islamic point of view, is how can one get into property without touching mortgage, without touching interest?
That's a great question. Look, I would say probably 15 years ago would have been, MCCA has been around for about 25 years. I think that's 25 years or maybe a little bit more. But there's a lot more halal lending products available now. So, they're all Sharia compliant products. I'm not a Sharia compliant expert, but it's got the Sharia compliant approval from local imams and international imams. So I think that's a really good avenue to get into the property market.
Right.
Because if you're not really leveraging in property, then I don't know if you're going to get the maximum return on your investment. I just don't know. Because the entrance cost into property is quite high. If you talk 5% stamp duty and 2% acquisition cost, and then you got a 3% exit cost, and then you got all those holding costs. It's quite an expensive asset to hold if it's full cash.
Plus, it takes a lot of time to manage it, keep it.
Correct. Yeah.
It's a lot of work. that goes into.
I'm not giving financial advice. I'm just saying,
I know, but I'm just saying.
But when you leverage, though,
it becomes a little bit easier.
It becomes let's just use an example, like a case study. If you're buying a $500,000 property, and the deposit on it is 20%, so you got $100,000, and the acquisition cost is $35,000 or $38,000. That's $138,000 on a $500,000 property that's renting for, call it $500 a week. You're probably going to be out of pocket about $9 to $10K a year.
Jeez.
Right? So it's about $900 a month.
Yeah.
That's okay. A lot of people can handle that. And that's pre-tax, pre-depreciation. If that property grows by, 10% in the first year, well, then you've got that property is now worth $550, but your cash on cash return is quite high.
Yeah.
Because your only initial investment was $135,000.
Yeah.
And then you've got obviously the negative gearing benefits and depreciation benefits.
Yeah. Okay. How did you get into your first property? How did that
my parents, they helped. So I saved the deposit and then they went in as a guarantor.
And helped you out.
And back then, 2007, there was no realestate.com app.
No. Oh yeah.
We were walking. We just went into the local. So it was a suburb next door to my mum. And look, when we think of investments, I think a lot of people, when they choose an investment property, it's based on their sentimental experience of their location and the area. So they bring a lot of sentiment to the purchase, and then it's like almost a gamble whether it's going to do well or not, right?
Yeah.
So lucky enough, my parents were in an area that was quite established and it's had some pretty good historical growth trends. and I just happened to buy in the next couple of suburbs, sort of northwest of it. And we just walked into like a real estate office. I just said, "Hey, I'm looking for a property," and he's like, "What's your budget?" I said, $330. He's like, "I've got one." And my mum and I didn't have a car then. We took the train there anyway. He put us in his car and drove us there. It was just an empty house. It's a 4-bed, 1-bath home. He's like, "You can have this for $330." I was like, "Okay."
Can't even.
So we bought it.
You can't even think of buying a broken down shed for $330.
I know.
Let alone.
And that was like, that I would say that asset is probably worth, at least in the early 9s now.
Yeah.
And that was 2007.
Crazy. It's just because when you think about it, the topic is so mind-boggling, right? Because everybody wants to put money in property just because of the way it's moving. But there you have people who are obviously a lot more, Islamic minded in the sense that, hey, we can't take leverage because mortgage. But then even the Sharia compliant agencies that we do have, when you actually look into some of them, some people don't agree with their processes. So it becomes a big tricky situation. Is how do you figure out a way forward? And because you're in a community where everybody wants to buy a property, everybody's sort of egging you on, have you bought a property yet? Have you bought a property yet? How does one sort of work through that? How does, if I can't, let's say I can't take leverage. Let's talk about Sydney. I've got 600K in my pocket. Let's just say, I know a lot of people don't have this kind of cash, but let's say I have 600K. I live in Sydney. What can I do with that 600K?
And are you saying you can't leverage?
I can leverage. I don't want to touch interest.
You can leverage? You can't. Even with halal.
We'll go with both options. Let's go with the one where I cannot touch.
But if there's a product available and you're not using it, again, then there are a lot of people. That's like a personal thing that I can't really. That's hard to answer.
Okay, let's say we can leverage the Sharia compliance.
Okay, that's
What can I get? What can I do with that?
So, I think if you look at every single market, every single city in Australia has market's going through a different cycle, and it's if you look at why Sydney's growing and why Melbourne grew so well until 2020, it's essentially like the economy being so strong. Population, there's always population pressure in Melbourne, Sydney. Historically, there's always been, the job market's quite healthy. It's got quite a diverse economy, right? So you got to look into the market that you're buying into first. But for 600,000, like if you're in Sydney, I wouldn't be getting an apartment because that's probably the only thing you can afford. I'd be looking outside of the city. So I'd be looking at potentially even regional New South Wales. I'd be looking into, some smaller capital cities, that have the fundamentals there. Because capital growth is essentially, it's a supply and demand function. Yeah. Right? There are foundational markets in Australia that have historical growth trends like your Melbourne and Sydney. And you can say Brisbane is now one of them. But then there are other smaller markets we call trading markets where like Perth historically has had a boom bust. Like it went south about 35% between 2012 and 2018. But that's because that economy back then was backed by the mining sector, right? Predominantly backed by the mining sector. And I was I'm not sure if you know, but I was in WA between 2009 to 2011. I worked in a diamond mine and a gold mine. And I was one of those ones that actually got made redundant at the end of 2011. Yeah. But I bought a diamond though. It was 2-carat diamond. But yes, I was one of those ones that was made redundant, and they went back to Perth. There was nothing to do in Perth. Yeah. So I just came back to Melbourne. And so between 2012 and 2018, that market went fairly south. Anyway, from 2018 onwards, the government really tried to bring in other industries and try and diversify the economy to try and attract migration back to that market. And that's why we've seen such a boom in that market. Yeah, it's had such a low base for so long. It's just going through a recorrection phase up, and then you'll start to see some sustainable growth come out of that market.
Okay, so that's good to hear that it is hopefully sustainable growth and it's not going to go down south again at some point.
I think so based on the data that we have access to, Perth is one of the most affordable cities to purchase a property in based on the income per household over the debt commitments. Okay. And because of that, if you have low supply, like they're sitting on about between 3,000 to 3,500 listings at any given point. 3 years ago or 4 years ago, they were sitting somewhere between 13 to 14,
It's
15,000 listings. Yeah. So if you've lost, 70% of your supply and you've got affordability, guess what? People are going to spend more because they've got the capacity to. And housing is a necessity.
Yeah, 100%.
So if you're in Sydney, to answer your question, if you're in Sydney, you just got to look outside of Sydney.
So forget about Sydney.
Forget about apartments.
It's not happening.
Well, forget about apartments in Sydney. I'm not a big fan of apartments. Now, there's two types of apartments. There's walk-up apartments, which is like the 2-story buildings on 1,000 square meters, and there's nine units to the block.
Those are more of the old type ones.
Yeah, built in the 1970s, like solid red brick ones. Yeah. I've seen those assets actually grow quite well. I've seen them grow between 7 to 8% over a 10-year period. Location is very important for those ones. But then you also got to look at the area. So if the area has a lot of height restriction, that asset will grow. Yeah. But if the area has all of a sudden opens up height restrictions, like what's happening in Maryland's at the moment, that asset will actually reduce because you're now competing against newer units. Wow. So it depends. So I don't mind that type of unit. The smaller, you think about it as a land to asset ratio. So if you've got 9 units on 1,000 square meters, and every unit's probably having like 90 square meters of land, right? Yeah. So
let's pretend I don't know anything about property. What is the logic behind buying a house or buying an apartment? Why does the house grow more or faster than an apartment does?
Houses are more scarce because land. Right. The land becomes more scarce. So if you buy an established suburb, like you look at Greenacre and Bankstown, like how far these markets have come over the last, even 5 years, 6 years. Like people are knocking down old houses and they're building beautiful duplexes. Yeah. Right. Yeah. So like they're not actually creating more land in Bankstown. Just using the
same land making more houses.
Yeah. So from a supply point of view, it's locked. With apartments, Australia, or let's talk about Sydney and Melbourne as the two big cities, there's a lot of airspace. Yeah. Right. When you go to like Singapore, do you know what the cheapest?
Oh, Singapore's crazy.
The cheapest price is for a property in Singapore. Do you know? So the currency is like 1-to-1.
Yeah, but it's really expensive.
And the income is almost 1-to-1 too.
Yeah.
Right?
Except they don't pay tax. Or very nominal.
Very nominal. Okay. Yeah. So disposable income is a lot higher.
A lot higher.
So the cheapest form of property in Singapore is a housing commission flat that's less than 50 square that not even a bank in Australia will lend, a shoebox. And do you know what they're worth now? Like 1.3 to 1.4 million.
That's worse than Sydney.
Yeah.
Crazy.
And but they're capped at like they have like, because it's all high rise, they don't have much airspace left. So that's why you see that appreciation, and they've got like constant demand pressure.
Yeah. And they also have less land than we do.
Correct. And you see a lot of unfortunately you see a lot of Southeast Asians. They come to Melbourne and Sydney and they go to South Bank. Well, I'm not sure what the South Bank equivalent is here, but South Bank is like on the Yarra in the city. Yeah. And they look at these $700,000 apartments and like, this is so cheap for a brand new building. And they buy it, and then they hold it for 10 years, and then they sell it for $650,000, and they made a loss.
Jeez. Well, so this is to my next question then. This sort of knowledge that you have, this experience that you have, this is why I'd say someone should look at a buyer's agent, right?
Yeah.
Now, being a buyer's agent yourself, what are some of those, I guess, what are your tips and tricks? How does one find a good buyer's agent? What do we look for?
Okay.
What are the red flags?
Red flags, if they got too much paid media, it's red flags. But anyway, let's not get into that. But look, I think you need to understand like what is their value proposition, right? So I get this a lot, right? So I get like we speak to prospects, like I talk to them. This is 2 days a week that I focus just on prospects, and the main feedback I get back is your fee's too high. We expect when our buyer's agent is less. So what are they actually bringing you? Like apart from representing you from the purchase, what strategy are they bringing to the table that's going to help maximize your wealth over the next 10 years? And you should be asking that question.
Right.
I'd ask them for case studies. I'd probably want to talk to anyone, one of their current clients, most recent client, and a client from 18 months ago.
And is it easy for them to connect? It should be easy for them to connect to an existing client.
Yeah. Well, we offer that to any of our prospects to call, and we just ask we ask any of our old clients, would you be happy to share your number?
Yeah, of course. Yeah. Okay.
So you need to see a good track record. I think understanding how long they've been in the business for
What's a good minimum?
Look, so I joined 4 years ago, and there was not many buyers agents when I started.
It's definitely grown since then.
Yeah. It's one of the growth. I think there was an article in the paper. It's one of the largest growth job sector. In Australia at the moment.
Interesting.
So
okay.
Ben Handler is doing a great job. He's the founder of BAI.
There you go.
Yeah.
Okay, so then you're looking at, obviously, that's a huge factor for you to look at, is how long they've been in that space.
Yeah, how long they've been in that space, because that will tell you, like, obviously continuity of work.
Yeah.
Because you see a lot of, like, buyers agents that come in and they do it for 3 months and it's not right for them, and they become a broker, and then it's not right for them and they do something else. You'd also want to check out, like, their Google reviews. Now, Google reviews can be a little bit deceiving, so you want to see, like, you can tell a good review from a fake review. So have a look at some genuine reviews.
Yeah.
And maybe ask the buyer's agent, I want to talk to that person.
Yeah. Is it possible?
Yeah.
And obviously be a red flag if they say no, or they don't have any of that sort of.
Yeah, if they say no, or we can't, if they say no, then there's a reason why they're saying no.
Yeah. And in terms of the cost to the end customer, what is that range that someone should be considering, in addition to obviously the investment that they're putting to pay the buyer's agent for that service that they provided?
It could be anywhere from 14,000 to like 25,000.
Right, so that's a good range for them to consider. So that's extra 14 to 25,000. They should
on top of the acquisition cost, correct?
Have on file. And how does the payments usually work? Well, once the house is acquired and everything is done.
So usually there's an engagement fee, and then like the total fee split up into engagement and success.
Right.
So engagement, and then success fee is once the property settles.
So then you'd be paying a portion first, which will start the engagement, and then you'd be paying the remainder once you're good to go. Is there anything else that one should be wary about?
Yeah. So one type of buyer's agents I see going around at the moment are ones that sell house and land or buy house and land packages. So I can tell you now, anyone that's selling a house and land package is getting anywhere between $15,000 to $40,000 from the builder.
So commission, back in their pockets, kickbacks.
Yeah. So if you're talking to a buyer's agent that's only going to charge you $3,000 or $10,000, which there's plenty of them at the moment, they'll charge 10, and then they'll get the balance on the other side.
So essentially, it's the affiliate marketing kind of tactic.
Yeah, and look, I've spoken to some prospects that actually don't have an issue with that, but I actually have an issue with that, because whose interest are they looking out for?
No, definitely not yours.
Yeah, because you're not paying
them enough. Someone else is paying them. Yeah. Someone has to pay them.
But even if the other person was paying a little bit, they're going to be conflicted.
Yeah.
And it's legal.
Because they're essentially selling it for them.
Correct.
That's what they're doing. They're sales.
They're using you as a channel agent.
Yeah. It's kind of like recruiters.
Yeah.
When they hunt for a role, they reach out to you. You're not paying them anything.
Yeah.
They're actually doing it for the company that's asked them to look for a role.
Correct.
Look for a candidate, for that role.
Yeah.
So now that we have, I think, a good understanding of what to look for in a buyer's agent, and we understand how much potentially we're looking to pay. Now, what do you think is a good minimum amount for an investment property? And that could be in Sydney. Well, I guess, actually, you know what, just whatever.
I think, I can give you some of the recent purchases that we've done.
Yeah.
So look, it depends on the client, right? So like we had a lovely client of ours join probably 3 months ago, and in her late years of work, so she's looking to retire in about 5 years' time. Not much in her super.
Yeah. That's not,
and she's saved about $100,000 in cash, right?
It's not a lot.
It's not a lot. And she had a budget of about $450K to buy. And we built the cash flow scenario of what a full $50K property looks like against debt and against potential income and all the holding costs, and it looked a bit steep for her from a holding cost point of view, for like week on week or month on month. So then we actually found her a property for about $385. Okay. And like that wasn't stretching her too much. The property was almost neutrally geared because we got something that had a high yield. Well, we bought really well. So we bought like a renovated solid brick concrete slab on 600 and something square meters. it will last at least, it's one of these homes that were like built 40 years ago that will last another 40, 50 years. So it's a gorgeous home. Anyway, so we bought that for her. And so I would say, look, you'd need to be at least in the 450 space to buy, a good investment. But there has been a few outliers where we've bought, 360, 380, but very carefully chosen.
Yeah. Okay. So you're looking at that 4 to 600K sort of band where you can potentially get something decent. And I'm assuming that's definitely not in Sydney or even Melbourne. That's
no, it'll be like a regional town that's got, again, so one of the things we look for is like solid foundations, right? So there's like macro data and micro data. The macro is more around, the migration, the economy, like how diverse the economy is. Like we like to see a strong healthcare presence. We like to see strong education presence. We like to see, strong, in manufacturing. Those 3 industries, people have to get up and go to work, or they have to get up and go. They can't work from home, right?
Right. Interesting. Okay.
Yeah.
So you've got that sort of.
So it needs people to be there, right? Yeah. And then we look at like affordability and finance, right? So we look at how income per household over their debt responsibility, and you can get all that information. It's all on ABS.
Yeah.
Right?
So you just crunch that data.
You can crunch that data together, and if you're under 50%, it's affordable. Over 50% is not affordable. You know what Sydney is right now? 89%.
Just waiting for the day it becomes 100%.
But the challenge with Sydney though is it has critically low levels of supply, right?
Crazy.
Like there's just not enough supply to meet the demand, and that's why you're always going to have upward pressure on price.
Yeah.
If you look at Melbourne is the same population, right? Yet, and you can almost say the same income, disposable income, but they had a lot more supply in the last 4 years, especially in the last 2 years. That's why that market just went sort of south.
So it's kind of that basic econ 101 that we studied.
It's basic economy 101. Yeah. It's not the house. I always tell my clients, the house and the suburb won't get you the capital growth. It's the region. If the region's under a lot of pressure,
then it's just
then it doesn't matter if you bought a shack or like I used to think it matters, right? But those asbestos homes and those shacks that I didn't buy all grew in value just as much as the property that I bought my clients. But I suppose the difference is once that market cools off, those properties will get recorrected.
Yeah.
Right. So we always look at buying in the right market, and then you look at the right suburb and the right street. Yeah. Right. And then the right house. And ideally, there's a few things that we look at for the right house, but we can go back. We can talk about that later.
That old adage about location. How true does that stand today, in your opinion?
Very true. So, so I should be a certified valuer in about 6 months, right? That's what I'm studying for at the moment. But I can tell you what valuers look for, and it's essentially location. So, first thing, environmental hazards. Yeah. Like some people buy properties that are a bit cheaper to get into a really good suburb because it's under a high voltage power line. Okay. Right? So you got to look at environmental hazards. Medium voltage, high voltage power lines, they're an issue. You can stay
far away from those.
Yeah, well, you try and stay far away. Even visually, if you can visually see it, it's going to turn buyers off. Yeah. Right. You want to buy something that's like the orientation of the block of land is like either a square or a rectangle, right? Or a corner block.
It's not a weird little.
Not like a triangle or a trapezium where you got a lot of dead land that you can't do anything with.
Yeah.
Correct. You want to get something as well, like that's flat. Ideally, you want something flat. And there are some suburbs that are not flat, right? Melbourne is a flat city. That's why I like flat homes. But like Sydney has a lot of, especially Hurstville. Hurstville is notorious for it. Yeah. So I would rather buy a property where it's on an incline. So the house sits higher than the street. Yeah. So at least when there's a lot of rain, the water falls into the road. It doesn't go the other way. But ideally flat. Zoning as well is very important. So just understand like what zoning's on the property. You don't want it on a main road unless it's a commercial property. Yeah. You don't want it backing onto a McDonald's or a Kentucky or a commercial property or a main highway or a train line. Right. This is what impacts the value of the property, right? You want it to be on a sort of inside street that's accessible.
Yeah, easy to get to. Yeah.
Easy to get to.
What are your thoughts on granny flats and some space for that?
Well, I've seen what it's done to Sydney. And it's actually done some wonders. And Melbourne, end of last year, Victoria has just recently eased building granny flat laws, right? So they're now allowing under 60 square meters, 60 or under, you can build a granny flat without a planning permit. So you just need a building permit. And that's going to help solve the housing crisis in Melbourne. And I think it did help solve Sydney's rental pressure, because at one stage Sydney was was crazy. Yeah. It's cooled off a little bit.
Okay, so that's a good to know that,
and it's a great way to increase your your income, like increase your holding costs on the the ability to hold hold on to the property.
Yeah, definitely.
And you can actually leverage it back out once you put it in.
Interesting. You hear this debate, which is, do you rent or do you buy? What's your take? Where do you sit on that spectrum?
So it depends who you're talking to. If you're talking to my wife, she'll say buy.
Yeah.
But I actually think rent vesting is a great way to get into the market, because you can live wherever you want.
You've got the ability to move
all
around.
The call it interest or whatever the terminology is, rent, all those expenses you can actually you can claim that against your income, right? So there's some tax benefits that you can get out of that. And I think living, I think there's a certain age that you can be able to sustain that for. Look, we still rent vest. Like my wife and I, we're renting a property that we couldn't afford to buy. Yeah. But we can definitely afford to rent.
You can at least live in it. Yeah. And then you'd have
very convenient.
Yeah. And if you want it to, if it doesn't suit your needs anymore, you can move out.
It's just annoying because we're a family of 6. Yeah. So
it's hard to move in and move out.
But I would say if you're going to rent, at least secure your money into a property. Yeah. So you're hedged into the market.
Yeah, definitely. Should you buy a new property or an established property?
Great question. So if it's a new property in a new market, in a new area, one of the main, I suppose, risks associated with that purchase will be the percentage of developable land in the area, right? So ideally, you want to buy a product that's scarce, right? Because the value of that product, if it's a scarce product, it will grow in value, right? Yeah. But if you have a product where there's unlimited supply of, or there's constant competition, it's always going to put downward pressure on the value of your rent and the value of your property. Now, high income earners love new properties because you can depreciate against the building, you can negatively gear, it helps sort of manage their income. Yeah. I don't know about that. Yeah. Because even once you depreciate the value of the property, then your capital gains tax is based on the depreciated value. So
does it really help or not?
And I think there's a lot more you lose out on from a capital growth point of view, from a wealth creation point of view on a new property than established. However, there are investors that bought whoever bought between 2017 to 2019 and got their keys in 2020 have experienced probably a 30 to 40% increase in the value of their property because of the construction boom increase that happened in 2022 and land price increase in 2022. But that was like an event that created that. You can call it artificial growth.
Going back to earlier when you were talking about micro data and macro data that you sort of crunch. In terms of an engagement with you as buyer's agent, how long does that typically take? How long are you sort of crunching this data to find the right?
Till we find the right property?
Yeah.
So it depends on how ready the client is, whether they come with the pre-approval and they've got all their plan mapped out and they've got an idea of what they want to spend and what their out-of-pocket looks like. That could take from engagement about 6 to 8 weeks, sometimes sooner, but on average about 6 weeks.
6 weeks, okay.
And then obviously until the property is rented, the whole journey takes about 14 weeks. But then if they need to get the pre-approval and then they need to, we need to do a strategy session. If they're a little bit unsure about what to do, then we essentially start off by doing like a game plans. Yeah. So we look at where they are now, where do they want to be in year 10, and then we sort of reverse engineer that and look at how many properties do they need to buy to achieve that end goal.
Yeah. In terms of the clients that you work with, in in sales, we have a term called ICP, which basically stands for Ideal Client Profile.
Oh yeah.
What does that look for you? What does an ICP look like for you?
Well, we've been lucky enough. I think in the last 3.5 years, we've transacted over 185 transactions.
Oh wow, mashallah.
And we've been lucky enough where I could say that professionals between the age of 35 to 50, in the medical space,
More so, yeah.
more so, and IT, they've been probably the main sort of clientele that we use. Yeah. But mainly professionals, yeah.
Interesting.
Reason being, they're so. I find them because they don't like to do anything unless they understand it.
Yeah, that's just
so they get caught up in the analysis paralysis of everything in life. So they need.
And
guidance.
They're paying someone to actually just do all that for them. And yet they still want to kind of be a part of this.
But I say this buyer's agency industry, if you can show competence, and you can show, and you can build trust, that's what the client wants to see.
Yeah.
So how you show that is based on the client experience with you initially. Yeah.
How do you bring the teachings of Islam in what you do on a regular basis?
That's a great question. So look, I would say my company is underpinned by 3, I'll say, fundamentals. One of them is, ethics. So we will, if we find something that's wrong with that property, and we've worked hard to get to that pointy end of the negotiation, we will pull back, no matter how hard it hurts, because we worked hard to that point. And I had an example last week. There's 2 young sisters I'm working with, and it was just missed. Somehow it was missed in our DD process, but got to the auction. Yeah. We did all this analysis on the property. It was we called it the house that keeps giving, right? This house had everything. It had land. It had a house, 3-bed, 2-bath. It had an attached granny flat to it. It was. We called it the house that keeps giving.
Yeah.
It was almost too good to be true, and it was. I had a look at the title, and we found the single dwelling covenant on the title.
So what does that mean?
It means you can't build multiple dwellings. To remove that covenant, you have to go to the Supreme Court, find the person who put it in, and then get it taken out. It's actually a long process. Oh. And that covenant was put in 1954. Yeah. So good luck finding the person that put it in.
Crazy.
Anyways, it was just so anyways, I told them and we backed out.
We're back, yeah.
The second one is transparency. I think just being very transparent. I think if you can, I don't think you should, don't overpromise. We don't underpromise, but we're just transparent with our clients.
This is what it is.
This is what the process looks like, and really, we're dictated by your appetite and your budget.
Yeah.
And the third one is we it's all about empowerment. So we love to educate our clients, and look, people from my community, I would say, look, I'm first generation Australian, right? So my parents came to Australia, and I would say most. I don't know. I think the I'd say most people from the Middle East have come to Australia. They've come to Australia in the 70s and 80s. Yeah. They worked hard to buy one house, pay it off, and just have cash in the bank. Yeah. But
that was the dream back then.
Yeah, but I want to empower the community to understand, if you really want to have a voice in, call it the political space or in your community, you'd actually need to have wealth behind you.
Yeah.
You do.
Otherwise, money dictates everything.
Yeah, because when you have wealth behind you, you've got connections, you've got...
it attracts. Something. It's a magnet.
It's a magnet, correct. Yeah. So we should all be working towards how can we sustainably create that wealth using the mechanisms that we have around us.
Yeah. No, I agree with you 100% on that. So those are essentially your 3 pillars of how you sort of run the business and how you move forward. And I think those are amazing. You don't hear the transparency as often as you'd like to hear it.
Yeah.
And I think that is and look, you and I have had we've engaged outside of obviously this podcast, but in general around properties as well. And I think that has been one of the biggest outstanding USPs, the unique selling point that I think you've brought to the table is the fact that you've been transferred, but not just that you've only engaged till we've got the property and the keys are in your hand, but you've kept on engaging further from that. So I think that is something we need to see a bit more of within our community, within the businesses that are
Yeah.
run in the community. So I thank you for that. Now, going back to the properties and the kind of properties, when you're buying a property, what are some of the things, an investment property really, what are some of the things that you need to watch out for? What should you really be looking for?
So I think we touched on it before around environmental hazards.
Yes,
I think it's a big one.
yeah.
Like if you buy a property in the flood zone, you could be up for like $6,000
Yeah.
in insurance costs. I think people underestimate the importance of a building and pest inspection. Yeah, it costs $660, and you may have to do it before you go to auction, but you're buying a property that's worth minimum $500,000. Like imagine you had to buy a $500,000 car.
Yeah.
What DD would you put in place before that?
Crazy.
So it's so important just to get a licensed builder and pest inspector, just go through the property and tell you what the risks are. You'll never find a unicorn property out there. I've never ever seen one.
Yeah.
Even brand new builds I've seen, like there was one brand new build we bought for a first home buyer. And there was defects on it, major defects. So they're around. So I think just to do that, just to understand the risk, and it allows you to sort of renegotiate. So some vendors will allow that.
So basically just do your due diligence and make sure.
Yeah.
Is there a checklist that you have that you provide, I don't know, maybe somewhere along a PDF that you send to your customers and say, hey, check all these things before you buy a property?
We normally run that process
for them.
Yeah.
Okay. Now, a couple of other types of properties. So you've got obviously residential properties that we've generally been speaking about. You also have commercial properties.
Yeah.
What are your thoughts on commercial properties?
Amazing. I love them. But it depends what class of commercial. So offices, not a big fan of. Right. Obviously, we've seen the impact of COVID and how it's changed the whole working landscape, right? And they've suffered a lot. Offices have suffered in Melbourne, probably more so in Melbourne, Sydney as well. And then Perth, yes, even though they're building more in Perth. That doesn't make sense. But I would say in the commercial space, I really like industrial. Industrial is the lowest risk. We don't, and we actually have a supply issue with industrial warehouses in Australia. And those markets that are moving quite aggressively from the economy point of view, we're seeing owner-occupied businesses are driving the price of commercial industrial up just because they can't get access to them.
Interesting.
So, we've been lucky enough to work with, so commercial, we do about, I'd say 15% of our business is commercial investments. We've been very lucky enough to buy some really good commercial lease investments. We actually just bought one for a client 6 weeks ago. It will be unconditional tomorrow. Their retirees, sold all their residential investments. They got cash and they just want passive income. So we bought them a $3.25 million industrial warehouse on an acre, and it was 1,800 square meter net lettable area, and the yield on it was about 7.1%.
That's great. It's amazing.
Yeah, net yield and we negotiated the 17-year lease.
Jeez, that's
so
amazing.
Commercial industrial
usually is set for 7%.
Well, there's two options, so 7 plus 5 plus 5.
Right, gotcha.
But we negotiated the lease terms. My clients now are very, very comfortable.
Amazing.
From an income point of view, that's coming through, and you get the land appreciation because it's a commercial industrial.
Yeah.
So I always say, with commercial, it's different to residential. So it's not a lot about the land space. It is somewhat, but it's more about the net lettable area of the building. So the value of the asset is based on the lease attached to it.
Yeah.
And the square meter rate, or how big the net lettable area of the building is. It's quite interesting.
It's quite interesting. And then what are your thoughts about just a plot of land? Undeveloped.
Yeah, so it's just not giving you income. That's the only problem with it.
But what about long-term sort of holding?
Yeah, so you just have to look at the holding costs associated with it. I don't think banks like to give too much. You can't leverage against it. Well, you can, but I'm not sure what type of bank it will be. Maybe like a tier 2, tier 3 or private lender. Unless there's some form of rental income coming in, it will stunt you from being able to grow further because of the holding cost, or if you're leveraging against it, there's interest costs that you're going to have to hold on to.
This is if you've leveraged it.
Yeah.
If say perhaps you purchase it with cash.
Yeah. So what's the objective?
Hold it for, I don't know, 10, 15 years and hopefully it increases in value.
So if you're buying a property that is going to be, if you've done enough research that gives you the confidence it's going to be rezoned, they're good assets to buy. Yeah. Because of your square meter rate can go anywhere from 5 to 10x. Right. as soon as it gets rezoned. Just remember or just be mindful of which state you're buying in, because Victoria has windfall tax now. So
what does that mean?
Windfall tax. So if your value of your asset grows because the zoning has changed, the government now is liable. They'll give you 50% of the growth and the other 50% gets taxed.
Wouldn't I just be more richer if I didn't buy any of this stuff? I just kept the cash in my bank. Okay, well,
but look, it just depends on the objective, and it depends on the profile of the investor. You know, like there are pro land developers or even land owners that have so much inside information that they know where to buy, and mate, like that it's a long-term play, but you can pay out big dividends later
if you know what you're doing.
If you know what you're doing, But if you just buy a farm in the middle of I don't know where, but in the middle of nowhere in Timbuktu, unless it's very close to a town center, it's probably going to be a waste of an investment.
Okay. Now, is there anything that you think that we haven't covered that you think we should share?
Yeah, I just want to talk about mindset.
Yeah.
Because like the mindset, I'm going back to the community here because I'm from the community, and although I'm not from Sydney, I'm from Melbourne. But I would say the mindset in our community is very fearful of debt, and in a way, I can understand why. Because if you're taking on a lot of debt and you're not sure on where that debt's taking you, it could be quite daunting, right? But I think what we got to look at is, let's assume you buy a high growth asset or an asset that grows by 7% per annum. Once there's good debt and bad debt. Bad debt is your car loans and your credit cards.
Things that don't grow.
Yeah, things that just, like that sort of debt is just a waste, right? But good debt, I say, is how powerful debt can be or leverage can be is inflation actually reduces the value of that debt.
Of course.
Right? Even if you don't pay $1 off that loan, it reduces the value because it appreciates in value. Yeah. And then you got a tenant that's paying, call it 60 to 70% of the outgoings. And then you've got this tax deductible mechanism in place that you can, go against your income. So like when you look at the whole picture, it's like, why wouldn't you do it? And we're lucky enough to work with a lot of clients, right? And I do feel as though we're helping a lot of our clients create wealth. Yeah. And we got some case studies where like we've had a client recently in their sort of late 40s, got 10 years to go in their working life. Yeah. Like maxed out in debt, don't have any savings, have a little bit of equity. And I'll share one case study. So this client had a little bit of equity. They had like a 3-bed, 2-bath home, small block of land in the west of Melbourne. It had, when we assessed the property, they owned it for about 15 years. When we assessed it, it only grew by an average of 4% per annum, right? Which is under like 7% is the average, or 6.86% if you want to be
technical. Nothing, it's peanuts.
Yeah, peanuts, 4% peanuts, right? And they were bleeding about $25,000 a year, like out of pocket, just from interest and holding costs. Anyway, when they saw those numbers, they were like, I remember they looking at me like, what do we do? I'm like, I think you need to liquidate this asset. Yeah. It's time to say goodbye to it. And like, man, hats off to them. They did it. They actually listened. So they sold it. It was a tough market. It was in Melbourne, tough market. So they got a little bit less than what they were hoping for, but it's okay. What we ended up doing was we bought their first property in Perth. We paid, it's not around anymore, but we paid $365,000, right? Corner block on 800 square meters, and it was rented for $380 a week.
It's not too bad.
It's not too bad. The rent, it had an old tenant in there. Yeah, it had an old tenant in there. Anyway, it's gone up to about $550 now. We settled on this last year in May, by the way. That property, the valuation came in at $610.
Wow. It's double, nearly double.
Right. The initial investment into that property was about $65,000. Right? Because they went with a 10% deposit. Then we bought their second one in Townsville, and we paid $375 for it. 4-bed, 2-bath on 600 square meters, and had 3 living areas. Big house. We rented it for $595 per week. We paid $375, so it was like almost neutrally geared. That's worth 560 now, right? And that's only been 1 year, right? But these guys, what they've done is they took action. They understood their position. They took the action. We presented what regions we think they should buy in. They just listened to us and bought it. Even the second property, they're like, oh, this is a bit too quick. I'm like, that's okay. If you're not comfortable, we can put it on hold. But what is it about the transaction that you're not liking? We went through the whole process of why we selected it. Anyway, they were like, you know what? We just felt like maybe like we're making two big decisions, but we're fully trusting you and let's just do it. Anyway, so they bought it. And so what you call like that, I don't know, out of those two transactions was about 120K investment. That's yielded now, if you go 610, 365, what's that? 250?
Somewhere about that, yeah.
Yeah, and then you got the other one, 375 into 530 or 550. That's about 180, 175.
Yeah. It's decent. It's
decent.
It's pretty good. But isn't the original issue that we have here is Sharia doesn't allow us to leverage? Because I understand we can change the community's mindset, but that's what it comes down to. Hardliners like me would say, hey, can't touch it.
Okay, so what I would say to that, now I'm not an Islamic finance expert. Yeah. I'm not the guy to talk to.
Neither am I.
Right? But maybe next time we should have what's his name? Dr. Amir
Tanvir?
No, but who's the other one? There's another one that's Islamic finance expert. Amir Colin. Anyway, but
we'll find him.
when it comes to Islamic finance, you have to get advice of someone who actually is an expert in Islamic finance for them to then tell you whether our products that we have available are halal or not. Going to, with all due respect to local sheikhs, going to your local sheikh or going to someone who's an expert in a specific field in the deen, they probably don't have the expertise to tell you.
You need to go to the right person. There's no point in me going to try and ask non-buyers.
You don't go to an optometrist and ask them,
your throat's hurting,
or you got a problem with your foot. You go to
a specialist. I understand that.
So I think so. Anyone that's listening to this, go find
a specialist
in Islamic finance. Sit down with them and ask them those questions.
Yeah.
Because unfortunately, we can't escape the country we're in. Well, we can't escape it, but we're in this country.
Yeah.
Right?
Unless you want to get up and move out.
Yeah, but there's interest in.
It's everywhere. Even in the Middle East, in Muslim countries, you have the interest.
Yeah.
Even in like the likes of Dubai, you can get a loan on a certain interest amount.
Yeah.
And the Dubai Islamic Bank will give you an interest loan. And they're an Islamic bank. So no, I understand where you're going. I understand what you're saying. But again,
but that's hard. Like, so then it's hard to ask that question.
Yeah.
What do we do with mindset? I think the answer to that is go and do your own due diligence and find what's applicable and what's not, and what you're comfortable with. And then at the end of the day, you got to make the call. It's not for everyone.
Yeah, no, I agree with you. Now, this next question is, and this is the last question I'll ask you. It's this off topic. If you were to die tomorrow, how would you want people to remember you?
Look, I think you got me there. That's a big question. I just want people to think of me as someone who, is ethical and help them and someone that gave, the genuine time to, help them to achieve what they want to achieve. That's all. Yeah.
It's a good answer. I like that. And with that, we'll call it a wrap.
Cool.
This episode was powered by Manara Studios.